Hi everybody, thanks for taking time out of your day to watch this video. This is the stock market industry update for the week ending December 15th, 2017. We'll cover each of the major US industries that make up the S&P 500 stock index. I will jump right in and begin with the Telecommunications index. Looking at this telecom or telecommunications chart and index, we have a very sideways market with lots of volatility in telecommunications. This is a 6-month chart, as are all of the charts I'm about to show you, and all of these charts are as of the close of trading on Thursday, December 14th, 2017. You can see here telecommunications peaked on October 4th. Had a huge sell-off with some of the major telecommunications stocks getting hit, and then right back up again with that 5-day moving average crossing over the 20-day and over the 50-day, and now we're all the way back up here again, testing those highs of October. However, we had a little bit of a sell-off here the last couple days, so we need to keep an eye on whether or not we can get higher than this October 4th high. Because as of right now, it came up and touched it and turned right back down again. But we have the 5-day moving average in red above the 20-day in blue, indicating short-term strength, and then the 20-day in blue over the 50-day moving average in purple, indicating intermediate-term strength. When I say short-term strength, I mean hours to days, and intermediate strength is days to weeks. So just different time frames on these moving averages. Taking a look at information technology. Here we have the information technology index within the S&P 500. It's been a pretty steady uptrend for the last 6 months. And as of December 14th, that 5-day moving average popped back up above the 20-day moving average, indicating short-term strength. And that 20-day moving average in blue is still above the 50-day. So we have intermediate term strength as well. Right now, it's been going sideways for about 3 or 4 days. So we'll see where we go over the next several days with this technology index. Here is the chart of the materials index within the S&P 500. We had a really strong rally from August 11th. Up to October 26th, and then a sell-off followed by another recovery back to those highs, testing the October 26th high. We got back up there on December 4th, sold off again, tried again on December 13th, and then on the 14th down we went. And so this particular materials index is having a really hard time getting above that October 26th high. So I'll be keeping an eye on it, but as of right now, it tried 3 times and couldn't do it over the last couple of weeks. As of right now, the price is below the 5-day moving average and below the 20-day moving average. So that's some short-term weakness. However, really the 5-day average is above the 20, indicating real, true strength in those moving averages. So we'll see where we go over the next week. But as of right now, the 14th of December was a strong sell-off for materials. Here's the chart for the Consumer Staples Index. We had 6 months of punishing declines from basically about the springtime, maybe February, March, all the way until October 6th. And November 6th, and we bottomed out down here on November 6th, and then somebody lit a fire underneath consumer staples, and it just took off like a rocket and went up to here on December 6th. So it topped here on December 6th, sold off, and we've had a week of sideways market action on consumer staples. As of right now, you can see the 5-day moving average in red is above the 20, and the 20 is above the 50. So again, we have short and intermediate term strength with the Consumer Staples Index. Here's the S&P 500 Industrials Index. We had a sell-off from October 20th down here to November 15th, and then As we entered into the Thanksgiving and Christmas season, boom, the industrials shot up here to a new all-time high, and the 5-day average is above the 20 and the 20 is above the 50. So like so many of the other indexes, we have short-term and intermediate-term strength, and a slight sell-off here on the 14th of December, but not enough to make that 5-day moving average turn down. Here is the chart of the S&P 500 Utilities Index. We had a recent low back here on about October 3rd, and then utilities rallied up to this high up here on November 14th. But we have a little bit of a, problem, or I should just say weakness here. It's been in decline since November 14th, so that makes 1 month of declines so far for utilities, pushing that 5-day moving average below the 20-day moving average in blue. So we have short-term weakness here, and we'll see if it continues over the next several days. The price of the utilities index has actually fallen now below the 5 and the 20 and the 50. So as of right now, the direction of the utilities index is not looking very good. But we have to wait and see kind of what the moving averages are up to. We have an issue here, I see, in that the 20-day moving average has formed a top and is now in decline, indicating some caution in the intermediate term as well. So right now it's been a month not too good for the utilities index. This is the chart of the S&P 500 Consumer Discretionary Index, and this index is probably one of the strongest. It's been in a really strong move ever since August 18th. In fact, it's actually formed a rather parabolic pattern here, which can be and often is a dangerous pattern. Anything that goes parabolic or vertical often comes right back down quickly. So I need to keep a close eye on it, because we sold off from December 4th down here to the 6th, and then we've had several days of a rally right back to that all-time high, but it hasn't broken through that December 4th high yet. So it's worth keeping a close eye on. But right now we got the 5-day moving average pointing up, the 20-day moving average pointing up, 50-day moving average pointing up. So strength on all time frames, short and intermediate term here with Consumer Discretionary Stock Index. Here we have the S&P 500 Financial Stock Index. Nice little bottom here back on September 7th, followed by a big strong rally, slight sell-off, a month of sideways movement, or a couple weeks of sideways movement, and then November 27th, boom, it just took off like a rocket. Made it up here December 4th to a high, slight sell-off, and then several days ago we had a new all-time high on December 12th, but as of December 14th it has sold off, and now we're back below these two previous highs and below the 5-day moving average. But 5-day moving average is still pointing up, 20-day moving average pointing up, 50-day moving average pointing up. So we have strength on short and intermediate term time frames here. Here we have the S&P 500 Energy Stock Index. We had a bottom earlier this year on August 17th, followed by a very strong rally up here to about the end of September 29th. Slight sell-off, another big rally to try to make new highs, but then it just turned right around and gave it all away. Some sideways movement, and now we're pushing higher again. We've been going sideways for about 2 weeks here. But really, the energy stocks have gone sideways almost since about the 28th of September. Not a lot of movement, a lot of back and forth sideways movement. But the 5-day moving average is above the 20, indicating short-term strength. But here on the 5th of December, the 20-day moving average dropped below the 50, indicating some short-term weakness. The weakness comes from this 2 months or so of indecision and sideways movement. So right now we've got a little bit of a upward trend on the short term, but intermediate term is still mixed and leaning toward weakness. Here's the final chart. This one is of the S&P 500 Healthcare Stock Index. And this one has gone sideways mostly since about September 12th. But recently we had a little bit of a recent low on December 7th and then a big push to the upside, which is on this chart shown as the 13th of December. But right now the 5-day average is above the 20, indicating short-term strength, but the 20 is still below the 50, indicating some intermediate-term weakness. But you can see that within the next few days, there might be a crossover here. We have to just wait and see if that 20-day moving average crosses back up above the 50-day moving average to give us some intermediate-term strength. So that's the last chart for today, and I will update these again next week. Thanks again for your time today. I hope you found these charts useful and giving you a sense of the direction of each one of the industry sectors. Please take a moment to subscribe to this YouTube channel by clicking on the subscribe button, and also click on the little bell next to it that says alert me to all new notifications. And if you use Facebook, LinkedIn, or Twitter, you can find Christensen Wealth Management there as well, and I post more frequently to those. These videos are a weekly occurrence. So take a moment to visit the other social media sites so I can stay in touch with you more frequently. With that said, have a great day, and I look forward to talking to you soon.